The reality check. Let's be honest for a second. Most people who come into this game, they lose. Statistics tell us that 90% of traders lose 90% of their money in their first 90 days. They don't just lose their capital, they lose their confidence, they lose their time, and eventually they lose their hope. Why does this happen? Is it because they are not smart enough? No. Doctors and engineers fail at trading every day. Is it because they don't know technical analysis? No. You can know every pattern in the book and still drain your account. They fail because they are trying to build a skyscraper on a foundation of sand. They lack a complete framework. Defining the framework. Trading is not about predicting the future. No one knows what the market will do next. Not me, not you, not the banks. Trading is about managing chaos. To survive in the markets over the long term, you need to build a house that cannot be blown down by a bad news event or a sudden crash. That house rests on four unbreakable pillars: mindset, risk, execution, and routine. If you ignore even one of these, the whole structure collapses. Today, we are going to build that framework together. This is your blueprint for consistency. This is how you move from a gambler to a professional. Pillar 1. Mindset. Let's begin with the foundation. Pillar 1. Mindset. Most new traders think mindset is about positive thinking or manifesting money. It is not. A professional trading mindset is about probability and acceptance. You must accept, truly accept, that trading is a game of math, not magic. Think of the casino. The casino does not care if they lose a single hand of blackjack. They don't get angry, they don't try to win the money back immediately. Why? Because they know they have an edge. They know that over 1,000 hands, the math guarantees they will win. You must become the house, not the gambler. When you put on a trade, you are not right or wrong. You are simply executing a statistical edge. If the trade loses, you are not a failure. It was just the cost of doing business. If the trade wins, you are not a genius. It was just probability playing out. You must detach your ego from the money. The market does not know you exist. It does not care about your rent payment. It does not care about your dreams. The moment you start hoping or praying for a candle to move, you have already lost the battle. Stoicism is your weapon. You must remain flat. No highs on the wins, no lows on the losses. Just data. Pillar 2. Risk management. Once your mind is right, you need defense. Pillar 2. Risk management. This is the only thing you can actually control. You cannot control the market direction. You cannot control the volatility. But you can control exactly how much you are willing to pay to find out if you are right. Amateur traders focus on how much they can make. They dream of the Lamborghini. Professional traders focus on how much they can lose. They focus on survival. Your number one job is defense. Capital preservation is the holy grail. Let's talk about the math of ruin. If you lose 50% of your account, you do not need 50% to get back to break even. You need a 100% gain. That is a mountain very few people can climb. Never risk more than 1 to 2% of your account on a single trade. This sounds boring, I know. You want to get rich quick. But if you risk 10% on a trade, a losing streak of 5 trades destroys you. If you risk 1%, you can be wrong 20 times in a row and still be in the game. A stop loss is not an option. It is an insurance policy. Moving a stop loss further away because you think it will come back is the cardinal sin of trading. Respect your stop. Take the small loss. Live to fight another day. Pillar 3. Execution. You have the mindset, you have the risk plan, now you must pull the trigger. Pillar 3. Execution. Execution is where theory meets reality, And this is where hesitation kills you. There are two ways execution fails: hesitation and impulsiveness. First, hesitation. Many traders suffer from analysis paralysis. They see the setup, everything looks good, but they freeze. They wait for one more candle. They wait for one more confirmation. By the time they finally enter, the move is over. They buy the top. You must trust your edge. When your criteria are met, you click. Second, impulsiveness. This is FOMO, fear of missing out. You see a green candle shooting up and you chase it. You have no plan, you have no stop loss, you just want to be part of the action. That is not trading. That is donating money to professionals. Your execution must be mechanical. Think of yourself as an algorithm. Does an algorithm hesitate? No. Does an algorithm get excited? No. It sees the data and it executes. Be the algorithm. Seamless, emotionless, precise. And finally, the glue that holds it all together. Pillar 4, routine. This is the invisible work. The work you do when the market is closed determines how you perform when the market is open. You can't just wake up, roll out of bed, and start clicking buttons. That is a recipe for disaster. You need a pre-market routine. 30 minutes before the bell, you are at your desk. You are reviewing the news. You are marking your key levels. You are identifying your targets. You are preparing your mind for war. And equally important, you need a post-market routine. You must journal every single trade. If you are not tracking your data, you are just gambling. What was your emotional state? Did you follow your rules? Did you exit too early? Success is not found in the winning trade. Success is found in the boring, repetitive routine of reviewing your mistakes in your journal. Consistency in your routine leads to consistency in your equity curve. Conclusion: mindset, risk, execution, routine. These are not separate things. They are a chain. Your routine builds your mindset. Your mindset enforces your risk management. Your risk management allows for fearless execution. If one link breaks, the chain snaps. Trading is a lonely journey. It is the ultimate path to self-mastery. The market will expose your flaws. It will test your patience. It will try to break you. But if you stick to the framework, if you show up every day and do the boring work, the results will come. Focus on the process, not the profit. I will see you tomorrow.